In this video, we're going to be performing a deep dive on Northwestern Natural Holding Company's dividend safety. To begin, let's talk about Northwestern Natural Holding's business model. Northwestern Natural Holding was founded in 1859 and has grown from just a handful of customers to serving more than 740,000 today. The utility's mission is to deliver natural gas to its customers in the Pacific Northwest, and it has done that well, affording it the ability to raise its dividend for 63 consecutive years. Northwestern Natural Holding trades with a market capitalization of $1.85 billion. Northwestern Natural Holding is a well-known dividend stock because of its compelling track record of dividend growth, with 63 years of consecutive dividend increases. Northwestern Natural Holding is a member of the Dividend Aristocrats Index, a group of elite dividend stocks with more than 25 years of consecutive dividend increases. In fact, Northwestern Natural Holding's dividend history satisfies the requirements to be a dividend aristocrat more than twice over. With more than 5 decades of consecutive dividend increases, Northwestern Natural Holding is a member of the Dividend Kings, a group of even more exclusive stocks with 50-plus years of dividend increases. Looking ahead, investors cannot rely on Northwestern Natural Gas Company's dividend history alone to measure its dividend safety. For the remainder of this video, we will discuss the company's current dividend safety from 4 perspectives. 1. Its dividend safety in the context of its current earnings. 2. Its dividend safety in the context of its current free cash flow. 3. Its dividend safety in the context of its recession performance. 4. Its dividend safety in the context of its current debt load. First, let's discuss Northwestern Natural Holdings' dividend safety in the context of the company's current earnings. When Northwestern Natural Holding announced its fourth quarter financial results on March 1st, the company reported that it generated earnings per share of $2.24 during the fiscal year. For context, Northwestern Natural Holding paid $1.90 of common share dividends during the same time period for a dividend payout ratio of 85%. Using earnings, Northwestern Natural Holdings' dividend appears fairly safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Northwestern Natural Holdings' current dividend payment to its free cash flow. During fiscal 2018, Northwestern Natural Holding generated $169 million of cash from operating activities and spent $215 million on capital expenditures for free cash flow of a negative $46 million. The company distributed $51 million of common share dividends during the same time period. Using free cash flow, our conclusion is that the company's dividend does not appear safe for the foreseeable future. However, gas rates are at their lowest rates in a long time, significantly reducing the operating cash flows being received. Additionally, much of the capital expenditures is on investments in customer growth and the North Mist gas storage expansion project, leading to historically elevated capital expenditure levels. These investments should bring in additional free cash flows in the years to come, meaning that the dividend is not threatened by the temporary lack of free cash flow. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. Accordingly, this section will analyze Northwestern Natural Holdings' current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by measuring its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Northwestern Natural Holdings' performance during this time period is shown here. Northwestern Natural Holdings' earnings per share declined by 7% peak to trough during the last recession. More importantly, the company's earnings continued to cover its dividend, and it continued its multi-decade streak of consecutive dividend increases. Accordingly, we have no concerns about the company's ability to pay rising dividends during future economic downturns. The last angle that we will use to assess Northwestern Natural Holdings' current dividend safety is by looking at the company's current debt level. More specifically, we will see how much the company's weighted average interest rate will need to increase before the company's free cash flow will no longer cover its dividend payment. During fiscal 2018, Northwestern Natural Holding generated $35 million of interest expense and had $954 million of debt outstanding, for a weighted average interest rate of 3.7%. The following image shows how changes to Northwestern Natural Holdings' weighted average interest rate would impact the company's dividend coverage as measured by free cash flow. As previously discussed, Northwestern Natural Holdings' current dividend is not covered by free cash flow, given its high level of growth capital expenditures. However, more importantly, we see that interest rate increases do not have that large of an impact on reducing free cash flow. As a result, under more normalized operating cash flow and capital expenditure levels, $220 million and $140 million respectively, the interest rate would have to rise to nearly 8% to threaten the dividend. Accordingly, we believe that Northwestern Natural Holdings' debt level is unlikely to impact the safety of its dividend moving forward. Thank you for watching today's video, which performed a deep dive on Northwestern Natural Holdings' current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.